the air crackles with anxiety. In sleek boardrooms and bustling street markets, the same question hangs heavy. Can China's economic miracle survive the current storm? This week, from the heart of Beijing's power structure, came an answer, not in thunderous pronouncements, but in a flurry of pronouncements, a quiet symphony of economic intervention. President Xi Jinping, the enigmatic figure at the helm of the world's second-largest economy, convened an extraordinary meeting of the Politburo, the Communist Party's inner circle. The message, delivered with unusual urgency, was clear. The faltering Chinese dragon needs a jolt of adrenaline. This wasn't the usual bureaucratic ballet, a carefully choreographed performance of incremental adjustments. No, this was different. This was Xi Jinping, the architect of China's resurgence, staring down the specter of economic malaise and declaring, with quiet force, "Not on my watch." The numbers tell a chilling tale. Growth, the lifeblood of the Chinese dream, has slowed to a crawl. The once booming property market, a cornerstone of personal wealth and national pride, teeters on the brink. The carefully curated image of China as an unstoppable economic juggernaut, an image she has meticulously cultivated, is starting to crack. For years, China's economy hummed like a well-oiled machine, churning out ever-increasing GDP figures and lifting millions out of poverty. It was a testament to the party's leadership, a vindication of Xi Jinping's vision. But now the engine sputters. The global headwinds are fierce, a trade war with the United States, a pandemic hangover, and a war in Europe have all taken their toll. But the roots of the crisis run deeper, a toxic cocktail of over-leveraged property developers, slowing consumer spending, and a growing sense that the once-in-a-generation boom is coming to an end. And so, Xi acts. The Politburo's pronouncements, while short on specifics, send an unmistakable signal. The Chinese government is willing to spend big to avert a full-blown crisis. 2 trillion yuan, a staggering $284 billion, will be pumped into the economy through special sovereign bonds, a move that has sent shockwaves through the financial world. The money, according to sources close to the decision-making process, will be split between 2 key priorities: stimulating consumer spending, the lifeblood of any healthy economy, and bailing out debt-ridden local governments, many of whom are drowning in a sea of unpaid bills. This isn't just about propping up the economy. It's about preserving the legitimacy of the Communist Party, about safeguarding the social contract that has underpinned China's remarkable rise. A faltering economy breeds discontent, and discontent, as she knows all too well, can quickly escalate into something far more dangerous. The Politburo meeting, usually a tightly scripted affair, took on an air of urgency this time around. The readout, released hours earlier than expected, was noticeably shorter on platitudes and long on action verbs. Forceful implementation was the order of the day, a clear signal that the time for half measures is over. The property market, the epicenter of China's economic woes, received particular attention. The Politburo vowed to stabilize the sector, using language that suggested a willingness to intervene directly to prevent a collapse. This is a significant shift, a tacit acknowledgement that the market, left to its own devices, is incapable of righting the ship. The focus on the economy, at a time when China faces a host of other challenges, speaks volumes about the level of concern within the party elite. This wasn't just another item on the agenda. This was the main event, the issue that kept Xi and his comrades up at night. The Politburo's pronouncements have been met with a mix of cautious optimism and skepticism. Some analysts see it as a turning point, a sign that the government is finally willing to do whatever it takes to get the economy back on track. Others warn that the measures, while welcome, may be too little, too late. Only time will tell what impact Xi's latest gamble will have on China's economic future. But one thing is clear: the stakes are higher than ever. The world is watching, holding its breath, as China grapples with the prospect of a future less certain, less predictable, than the one it had imagined for itself.